So when you take the exam, I expect those kinds of reasonings, okay? It's because you have less of something. I won't give you zero for that explanation, but you won't get the whole 50% either. You get 50% for the correct answer, even if you don't know why. The other 50% by convincing me why that answer should be correct. Please do not say because you said so. Please do not say because it is. Please do not say it's on page 435. Hey, I'm not going to look at those pages. And make the following distinction. I am not asking you the reason you gave that answer. I'm asking you the reasoning why that answer should be. Your reason may be anything, you just felt it. That has no knowledge value. So don't be a Google generation. Because you guys are, again, this is not just you. My kids are kind of doing this. I kind of had to beat it out of them. My son in Boston College, after his first semester, he says, "Dad, you were so right." And now he's doing much better, which means he doesn't have B pluses anymore. That's kind of my standard. I said, if you ever get a C plus on any class, you're not getting a tuition paid. So he has to borrow it himself. He knows that I mean business. I'm not paying a lot of money for a C plus. If that was the case, he could have come to EKU. It's free. I told him, if you come to EKU, I'll give you half the money that I would have given to Boston College to your pocket once you're graduating. He literally said, no fracking way, Daddy. A, he doesn't want to be in the same school as his father, and two, he had too much of Kentucky, even though he was born here. Operating cash flow, this is the alternative definition, close to the alternative definition. This is actually false. It's earnings before interest and taxes minus taxes plus depreciation. Okay? When net new borrowings are subtracted from the interest payments, the result is called cash flow to creditors. That is the definition. Again, you should have no excuse to miss that question at home. No, they are not. Those are part of other operating costs. Costs of goods sold are the costs that you would have to incur in order to make that sale. Remember the matching principle. The rent that I pay for the building the headquarters is in, it has nothing to do with cost of producing those goods that I have sold. Ideally, I would make this question what I call Schrodinger questions. True, false, or uncertain. But I would say this is true because recognition principles says if you're going to recognize them as soon as sales process is complete and the amount that you can get is is almost known. Shareholders' equity is equal to fixed assets minus long-term debts plus net working capital. Yes, we kind of have gone through that identity. Remember, shareholders' equity is total assets minus total liabilities. But the current portion is current assets minus current liabilities. That's the net working capital. That's pretty much it. They do have some discretion, but this is actually, I'll go back to it. This is basically change in net fixed assets plus depreciation. So, no, that's not it. Ending net minus beginning net plus depreciation. Free cash flow is cash flow from assets. And income statement does what? Obviously, it has nothing to do with when cash is received. We record revenues based on recognition principle. That's pretty much it. Okay. I'm just going to do some cash flow problems. This is not one of them. Because I already have some videos for those. All right, let's do this. Just gonna use a different color for that. All right. Company paid $18.5 in dividends, $44.6 in interest. Net working capital increased from $10.2 to $28.2. They purchased $30,000 in new fixed assets, net new fixed assets, and had depreciation expenses of $15.7. During the year, they issued $45,000 new equity and paid off $60,000 in long-term debt. What's the cash flow from assets? It looks like we're going to have to calculate that from the viewpoint of where the money has gone, because we don't know anything about net income and stuff, so we can't do it from sources, right? So cash flow to creditors, interest minus net new borrowing. How much did they spend on interest? A little bit louder, please. 44,600. What do you think? How much they spent? How much new borrowing has been there? What is the net new borrowing? This one? That's in net equity. They paid off $16,000 in long-term debt. When you pay off, that's negative borrowing, right? So, in case you don't want to make that mistake, just put in as negative 16,000. They haven't issued any new debt, but they paid off something. So that's their cash flow to creditors. How much are the dividends? $15.5? 18.5. How much are the net new equity? And I want to hear other voices, please. I don't like these people that much. I don't want to hear them all the time. 45,000 because they issued new shares, okay? Had they repurchased that amount, that would have been negative 45,000 in net new equity. So they actually had negative cash flow to stockholders, and cash flow from assets is cash flow to stockholders plus cash flow to creditors. So which is negative 26.5 plus 6,600. I mean, I don't have the dollar sign in there, but that's actually a number, right?